What's up everybody, I am Jasprit Singh and welcome to the Minority Mindset. Do you know how much money you need to never work for another paycheck again? Bankrate.com released a study in 2018 and they found that about 7 out of 10 millennials don't have a clue of how much money they will need to, quote, retire or start living life the way they want without needing a paycheck. But I guess that's not too surprising, right? I mean, it's millennials, they're just stupid kids. Well, Bankrate also reported that about 6 out of 10 Generation Xers and baby boomers still don't have a clue of how much money they will need to retire, even though they've been out in the workforce working for decades now. So, doesn't seem like this is an age issue. It seems more like a financial issue. If you're gonna be working every single day, it makes sense to know what you're working for, right? A lot of traditional financial planners and retirement planners will tell you to follow the 4% rule, which says build a large enough savings account or nest egg, and then when you reach your retirement age, now you can start withdrawing 4% of your total savings every single year during your time in retirement. In other words, if you want to live off of $40,000 a year when you're retired, you should build up a nest egg or savings account worth $1 million. This way, once you reach your retirement age, you can take out $40,000 a year because $40,000 is 4% of $1 million, and you can do this for 25 years, and then after 25 years, you will either die or be broke. So I spent a lot of time trying to figure out how to explain my feelings and thoughts about this type of financial planning in a funny way, but I honestly couldn't come up with anything, so I'll just be straight up. This is a very stupid financial plan. Wait, what? But my financial planner told me it was a good idea. Let me go over why this is a bad idea and what you should be doing. Okay, so let's say you need the same $40,000 a year to maintain your current standard of living. The problem is the price of things don't stay the same. Every single year, the price of things keep going up with inflation, which is why you'll need more money next year to maintain the same standard of living as this year. So if you retired today and you took out $40,000 to live for the next 12 months, you'll do just fine. But in about 10 years, you'll need something closer to $53,000 to maintain your current standard of living, and in 20 years, you'll need something closer to $72,000, and this is assuming an average 3% inflation rate. So unless you're planning to live for only another 10 years, you're either gonna run out of money or you're gonna have to downsize every single year during your golden years of retirement so you can continue eating. I don't know about you or your retirement planner, but neither of those sound like fun to me. So let's stop thinking like the majority of people, since we're the minority mindset, and let's work to create income that grows with inflation every single year. So from the example earlier, when you had that $1 million sitting in your bank account, not only is that $1 million growing at close to 0% interest as of 2018, but that $1 million is also losing somewhere between $20,000 and $30,000 worth of buying power every single year it's sitting in the bank because of inflation. Wait, what are you saying, Jasprit? Are you saying that I'm losing by saving? Yes, 100%. Saving is losing. So here's an alternative that you can do in 3 steps, and if you want to, take notes. The first thing you need to do is get an idea of how much money you will need to live using today's numbers. So let's assume you will need the same $40,000 a year. Second, take that number and multiply it by 1.25. So $40,000 times 1.25 is $50,000, and I'll explain why I'm doing this in just a minute, so stick with me. Third, take this new $50,000 number and divide it by 0.06, and this will give you about $833,000. Now, I know this probably doesn't make any sense, so let me explain what we did. Since the goal is to generate income, you will have to pay taxes on it, which is why we multiplied $40,000 by 1.25, which gave us $50,000 of pre-tax income that you will need to earn every single year without physically working. And if you strategically invest, you will be able to pay a lot less than this $10,000 figure in taxes, and you will be able to pocket that money. This way you can take a break during your busy retirement. We can call this break a tax break. then you will need to either buy or create an income stream that pays you at least a 6% annual return on your money every single year without you physically working. And notice that this $830,000 figure is about $170,000 less than if you went with that 4% plan, because now you're gonna have your money working for you so it can earn you more money. Now, there's two things you need to know. First, if that $830,000 figure seems like it's so out of reach or impossible, you need to remember that it's not gonna happen overnight. And if it still seems like you will never be able to achieve that, then maybe you need to start thinking different and create a side hustle or a side business or do something different to create more income, because now at least you know what you're working for and you can work towards that goal. And second, if you've never invested your money outside of your savings account, that 6% return might seem like a huge return, but it's actually lower than the average stock market and lower than the average real estate return. And we did that on purpose because there will be times that your investments don't always go as planned, and hopefully you'll be able to do better than an average 6% return, and you can pocket that money and use it for other things. So how do you do this, right? Well, my personal favorite is by buying real estate as an investment. The way you do that is you would find an investment property and then you would lease it out to tenants, and in exchange for them using or living in your property, they would pay you rent. The best part about this is that now you've created an income stream that will pay you every single month, and you don't have to physically do any work. So you can be out traveling the world and doing something else, and your tenants would still be paying you rent every single month because they're still using your property, and you can hire a management company to do all the day-to-day work. But wait, that's not all. So remember when we were talking about the 4% plan and how you would have to downsize the way you live every single year because inflation's gonna eat at your nest egg? Well, now it's a little bit different. Now, when you invest in real estate, you can factor in inflation adjustments to your rent. This way, if you charge $1,000 a month in rent this year, next year, you can charge $1,030 a month in rent. This way, your income is adjusted for inflation, so you don't have to adjust your lifestyle, and you can maintain your standard of living, and you still own the property. So this way, you can leave a legacy, and you'll have something to give to your kids and your favorite charity. And of course, there are inherent risks with investing. You are never guaranteed to make money when you invest. You might even lose money when you invest. So you should always speak to a professional in your area so you understand all the risks and regulations that govern investing. And if you do want to learn more, we have an ebook on money and investing that you can read for free when you sign up for our money and finance newsletter. And you can do that by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed our video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Wednesday and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button below and the notification bell. That way you actually find out when our new videos are released. And as always, keep hustling.